back. The corporate which is on our radar right now is Go Fashion, one of the leaders in women's bottom wear brand. The company posted a 48% growth in its revenues, but margins came slightly under pressure, declining by more than about 100 basis points on a year-on-year basis, down to 30.1%. The stock is subdued in today's trade. It's down close to about 0.5%. But if you were one of those lucky investors who got the subscription in this particular issue, remember Go Fashion listed last year at an IPO price of $690. So from that level, the stock is still holding up, practically doubled from last year's levels, the IPO price. But from the listing price of about $1,300 thereabout, the stock hasn't given too much return. We're now joined by Gautam Saraogi, the ED and CEO of Go Fashion, on the show now. Gautam, thank you very much for joining in. Very strong top-line growth, 48%. But the profits are absolutely flat on a year-on-year basis. There is a bit of margin compression. Could you tell us what happened below the revenue line and what's the outlook?
So see, one of the reasons why our margins have declined is because our ad spends have actually increased. Usually we spend about 2 to 2.5% on advertising. This time we spent about 4.5 to 4.8%. We've seen our business coming back to normalcy post-COVID, and this was the best time to do brand building and invest on the brand. So as a strategy, we did some television advertising, we did different mediums of advertising and spent about 4.8% in the first half. So that is why there has been a small decline in the EBITDA margins and the PAT margins. But as far as gross margins are concerned, we maintained the gross margins what we had last year. So we are continuing to have gross margins of 60%, which will further improve as our EBO contribution increases. So as far as margins are concerned, we are quite optimistic in the next few quarters.
Okay, optimistic for the next few quarters. I think you have about an 8% or 9% market share currently, if I'm not wrong. Any targets that you have to grow your market share? I mean, this is a very competitive business. Say over the next 1 to 2 years, what would your target be as far as market share is concerned, and how do you look to grow it?
See, over the next 3-4 years, we would ideally want to have a market share more than 25%. See, in such a large market and being a market leader, if you're not able to have 25%, I think it will not do justice to our leadership position. So over the next 3-4 years, our ideal aim would be to have a 25% or higher market share in the organized bottom wear space.
That's from 8% currently. You're looking to go to 25% in the next 3 to 4 years, right?
Yeah, absolutely. So 25% or more.
Sure. So how do you plan to do that? What are the geographies that you're looking to penetrate further?
So it's going to be on the back of adding new EBOs, same store sales growth. We are also adding new products under bottom wear and strengthening our position as far as our product portfolio is concerned. But largely it's going to be on the basis of new store addition and current same store sales growth.
Okay, new store additions. So for the first half, you've done around 66. I think you're looking to do similar for the next half of the year as well. Can you tell us what market share should look like by the end of this year?
So see, we don't have a current idea on what is the current market share because we've not done any recent study. Okay. We had done it a couple of years back where we had an 8% market share.
Okay.
So on today's market and number, it's hard to give a percentage. But as far as number of EBOs are concerned, we are adding about 120 to 130 EBOs every year. Out of it, 66 we've added in H1. So we expect a similar number in H2 as well.
What's the category growing at? The organized bottom wear women's market. Your revenue growth is 48%. But what would the organized market grow at? And also, if you could tell us, what's the switch taking place from unorganized to organized?
So I think the organized and the branded space is growing at more than 20%. And this shift, what we are seeing from unorganized to organized is very sharp. I mean, look, a lot of brands have started opening their own EBOs with the incoming of new shopping malls, online. I think the contribution of organized to the entire retail is increased significantly. And that's why it's growing at more than 20-25% now.
So you are, in a product price of less than 1,000 rupees. I think you've consciously done that. 80% of your products are below the 1,000 rupee price. But now we are seeing this increasing trend of premiumization. Would you at any point look to hike prices? If yes, what's the maximum that you can go to? Just trying to understand from an operational standpoint if things can get better.
See, very rightly you said on premiumization. We are doing premiumization more from a quality of the product perspective. So we are improving the fabric quality, we are improving the life of the product. But from a selling price perspective, we would ideally want to keep us below 1,000 because our original strategy has always been to cater to the entire country as a whole. So we don't want to really be very premium as far as pricing is concerned, but keeping premiumization from a quality perspective.
Okay, so you're not looking to increase prices. If you could just take us through what the volume growth has been for this quarter, that's one. And also you do have around 130 crores of cash in your books. Any plans to utilize it?
See, as far as volume growth is concerned, we've had a more than 30% volume growth compared to last year on an overall company level.
Okay.
And more than a 35% growth on a volume level compared to pre-COVID, quarter to FY20 on an overall company level. If I look at same-store sales growth perspective, we are at a 8% volume growth compared to quarter to FY20 pre-COVID. Last year is not a comparable because quarter to FY22 was impacted due to COVID. So the real benchmark for us is pre-COVID. So at a same-store sales growth level, we are at 8% volume growth as far as quarter to FY20 is concerned compared to FY20. But at an overall level, we are having a 37 to 38% overall company increase compared to pre-COVID.
On the ad spends, you said in the first half of the year, the ad spends as a percentage of revenues was about 4.8%. Now, this is tracking higher than the guidance you had given us when we spoke to you in September, where you said that the ad spends will be in a ratio of 3.5 to 4.5%. What's the outlook on ad spends? Do you look to up it further or will it be at these levels? And consequently, therefore, what will be the impact on margins?
So see, the guidance is the same. We would end up with ad spends of about 3.5 to 4% because we wanted to do higher advertising before the festive quarter, which we did. And we have tasted good success in that. H2 post-festive, the ad spends are going to be significantly lower. So on an annualized basis, the ad spends will be about 3.5%. So from a margins perspective, we estimate strong EBITDA margins of more than 31-32% by the end of the year.
Okay, just trying to understand a little more about consumer preferences, right? Over 60% of your business comes from the top 8 cities in India. But when you penetrate further in tier 3, tier 4, what are you noticing? Are you seeing an increasing amount of business from there? Any higher contribution to the overall business?
No, I think, look, tier 3 and tier 4 are doing fabulously well for us. And I think I have to give credit to online because the way online business for the entire industry has opened up, consumption has significantly increased in tier 3 and tier 4. And we as a dedicated offline brand, we've opened stores in tier 3, tier 4, and some of our best performing stores are in tier 3, tier 4. So our experience in tier 3, tier 4 has been great. But for any company or brand to do well in tier 3, tier 4, it's very important that they establish in tier 1 and the top 8 cities well, which we are doing right now. So if your top 8 cities is strong, automatically that benefit comes in tier 3 and tier 4. Because the customer would have seen the brand in the top 8 cities at some point of time, which creates a recall in that respective city.
All right, we got that. Gautam, we leave it at that today. Thank you very much for joining us. That is the management of Go Fashion. They're sounding quite positive. They've been seeing volume growth of around 37-38%, so looking positive on that front. And the slight margin contraction that we did see this time around is on account of higher ad spends. But